Hello traders, good weekend to all. Vladimir here from Home Trader Club. Welcome to the weekly Forex forecast. Before we begin, big thanks to EightCap broker for supporting my channel, my community, and to enjoy the special offers we have together with EightCap broker, including the access to Home Trader Club up to 1 full trading year, including the private mentoring sessions, including the access to my trading systems, the SRS, Triple B, and others, including the trading indicators and the live trading room. Please refer to the link below this video in the description. The first pair I want to cover today would be the pound dollar. So I uploaded my previous weekly forecast late this week. It was only on Tuesday, I believe, when I returned from my trip to Jamaica. So what you will see now might be not that new to you, but it's important to follow up and to see where it all stands. So the way I see the pound dollar for the long term, after completing a triple cycle and 3 bearish wave, triple descending cycle with a major bullish divergence on the MACD, by the way also on the RSI, the pound dollar is screaming buys for the long term, and for me it is going long-term buys, with all the different considerations fundamentally, of course, but in the shorter term, if we can call the weekly chart short term, I believe that what the pair is building at the moment, and it's important to say the moment because we know how the market is, things could change, waves could develop differently. So the way it develops right now, I believe that after 2 waves up, it is making a structure of zigzag with a variant of ranging correction for the following. So the way I see that, this is the very key moment, because from here we have 2 possible outcomes. 1, halfway pullback before the breakout. 2, very logical one also, is the attempt to break, instant retest of this volume profile based balance zone, and from there big buys. Okay, so this is the expectation for the longer term. Now let's take a look how it all looks on the shorter term. So if we plot this falling resistance line, what we will learn very interestingly here, that besides the falling resistance line, we have a very big supply zone here where the sellers already took control, major control. So that's why I believe this zone could provide us short-term bounces towards this area instantly, or if it breaks through first of all and make the higher highs, then instant pullback towards this zone to retest the broken trend line. And with that in mind, let's go to the 4-hour chart and we will see. By the way, these lines I draw that, as you can see, I flip the charts and they move with me. This is my virtual trading pen. You can find all the information with the links below this video. In the description. So what happens now with the pound dollar? It is building these 3 waves, 3 very waves right now, right inside this area under a bearish divergence. And that's another technical reason why the closer we get there, the stronger the pressure could be to the downside. Now I want to be very clear, on the short term, either from here or slightly higher as we saw by breaking the previous daily high, imagine that happens, right? I believe that this divergence is still going with us, and then the pullback is going to be deep to retest the broken triangle. But for the long term, regardless from here or the first pullback, I am after buy these dips, okay? on a short term, this zone or slightly higher are tradable. Of course, if there will be the divergence completed and the bearish reversal signs, not instantly for the sell. But from there, the short-term pullbacks are very possible, very welcome to happen, because these pullbacks are the ones that should allow us to join and to ride the long-term buys here. So that's my view on the pound dollar. What would be your view? Feel free to share with us in the comment section below this video. The next one for this video would be the euro dollar. But before that, I would like to ask your support. If you find value in this video and the trading opportunities, please hit this like button. And if you are new to our fantastic community, please consider to subscribe with the subscribe button below this video. Feel free to spread the word and share this video with anyone who you believe can benefit watching this video and can enjoy these trading opportunities and the technical analysis we do here. Thank you very much for taking the time to help. It's very much appreciated. Now let's continue. So on the last video I published on last Tuesday, we discussed about buying these dips. So the euro dollar so far responding well. It's making the dips and so far bounces. Not significant rallies, but so far it actually bounces. And similar to the pound dollar, for the long term, if we go to the weekly chart, the euro dollar is actually making same technical structure. Two waves to the upside, zigzag in a variant of a range, which means usually one of the two scenarios. Bounce off the top and then the breakout, that's a very possible scenario, or breakout and then instant retest before the continuation. Unlike the pound dollar though, the euro dollar in the long term perspective is quite mixed, I would say, and the reason is because we don't really have a classical typical divergence between these two lows, which usually by itself means that these rallies are yet to be sold. I don't want to ruin the long-term party here, so we will focus on the shorter-term party. So with that idea in mind, and once again I will use my virtual trading pen, so we can draw these lines and it will be easy to navigate the lower time frames. When we do that, we can see that the closer we get to the top of the triangle, the stronger this pressure is expected to be. And like the pound dollar, the euro at this very moment, let me just highlight it, at this very high and this high and these highs here, that's a major supply zone. What do I mean by that? That's a major place where sellers showed their interest already, which is a great sign usually for a sell. Okay, so with that idea in mind, if we go to the 4-hour chart as we did with the pound dollar, there is a very interesting scenario that I would be following here. So this is some sort of a range. Okay, the name doesn't matter in that case because it will not change the analysis, just the name. So there are a couple scenarios that very typically the price follows from here. Because the first move down was based on 3 waves, in many cases what happens here is deeper correction before the actual retest. And that would actually not be surprising because that could be just one leg out of deeper corrective structure. Imagine something like that happens. Then a bullish divergence right from the rising supportive line and right from the demand area we have here, and a broken resistance become a support now. Okay, that could be classical opportunities to go and look to buy towards this zone. Now this is the first scenario on the euro dollar which the price could actually follow. Another very logical scenario is we actually managed to break, come for a retest, respect and reject the retest, and from there make the rally. Okay, now, these would be the 2 waves I would be looking to participate in the buys. On the sell side, it would be exactly the completion of the opposite view, completing of this very cycle, rising towards the supply and a daily trend line, completing this bearish divergence, higher highs on the chart, lower highs on the candle, and from there shorter term sells. That's the full analysis and the full view I have on the euro dollar. What would be yours? Let me know in the comment section below this video. The next one, dollar yen, with overriding conditions, upper right on the Bollinger Bands for more than 20 candles, right? It reminds pretty much what happened before in 2014 and 15 in these waves, and then bam. So right now, maybe the history repeats itself. Time will tell, but the pressure starts to be massive. If we take into consideration the higher highs on the chart and lower highs on the indicator, which make a potential bearish divergence, we understand that the chances for a drop down are increasing. And if we go to the weekly chart, on the weekly chart the scenario is pretty similar. So far, this is a potential bearish divergence. It's yet to complete, but it's already building up. So the dollar yen has two scenarios that I am following. The first one is that we complete here the rally, some sort of a double top. It's not really double top in terms of double top, but some resistance around the same zone with a daily divergence, and from there major sell. That would be perfect, as then it will complete some sort of a triple cycle on a daily chart with the weekly divergence in play. That could be a massive opportunity. The second scenario, which we started to follow in one of the recent weekly forecast I shared, that we got here two waves and then we want the zigzag, two waves or a range to the upside, which currently happen. And it happens beautifully because the higher highs on the chart already contradict with the lower highs on the MACD and RSI, which stands for bearish divergence and sell opportunity. So what I want, if this scenario triggers, I want the price to go below this structure, pull back, and from there opens the door for us for the sell. It's not a specific price, it's not a specific entry point, it's a specific trading plan. Technically speaking, we want to see the price going and holding below this broken ABCD or a range structure, and from there a major move to the downside. So this would be the two scenarios I'll follow on the dollar yen for the sell. Keep in mind, we are talking here long-term cycle. That could take time. Sometimes it takes a week until it breaks and crash. We all remember what happened at the beginning of May, right? It was hundreds of points moves. That could happen, especially with the yen pairs. But sometimes it goes as annoying as these ones in the last several weeks, and it's all normal. It's all part of trading. Keep that in mind, because sometimes the traders do the mistakes of what? Clicking too many times the buttons, expecting that their specific position will make the market move. The wish is understandable, but the market doesn't really care what we want. The market will do what the market has to do. So you follow the trading plan, and the trading plan is not clicking the mouse on to sell or to buy more frequently. Trading plan is follow what happens on the chart to trigger your trades. The final one would be gold, which brings back the discussion: is all-time high is over and with that big move down is coming. While this possibility still is there with this major divergence developing, the technical signs for that were not really given. So while the long term is still building up itself, let's talk about the short term. So on a daily chart, we did have a false breakout here with a bearish divergence on the MACD and the RSI, and all that happened after riding for more than 20 candles right on the upper side of the Bollinger Bands. Absolutely fantastic sign. So while the long term is building itself, I would not touch the long term right now, but on the short term we have some very interesting opportunities. And the reason for that is also on the 4-hour chart. You can see what happened here. overriding on the upper Bollinger Band, major move down. And if I take the Bollinger Bands right now, let's hide this level for a second. Take a look on the Bollinger Bands. We are now in the 2 duplications after the breakout. Okay, this is the custom-made Bollinger Band indicator, and you can get it with the link below this video in the description. But what I want you to pay attention to here is these 2 levels. First important low of the month, second low of the month, and the daily low of the month, they correspond to the daily levels of the Bollingers. The closer this move down happens, the stronger the chances are that we will experience the bounce to the upside. So that's 2 plays for me. One play is we got this final move down to in between these areas and the month areas we saw. There probably will be some divergence here, and from there buy back to inside this volume zone and potentially to the previously created high zone of interest, this or this. Okay, something like that. Target 1, target 2. Scenario number 2 is because the recent trend line is broken and now we make the lower lows. Also, what could happen with gold here on the short term is that these highs would be now retested and provide a shorter term sell opportunities. And this is exactly how I plan to work with the gold, in whichever the setups it will create to buy from the mentioned levels or to sell from the supply zone as mentioned. Keep in mind, levels, when it's achieved, it's fantastic, but you want to make sure you get the signs on the chart, divergences, price rejection, candle patterns, etc. Okay, you don't want just to attack, because just to attack is not an established setup, which means you take the bigger risk trying to predict or estimate or hope that something will happen in the way you want. And we want to trade with established setup, because then our odds to be right in our trades are increased. And in trading, it's all about that. What do you think about the gold? Feel free to share in the comment section. So that's pretty much it for this video. I hope you find value in this one. Please hit the like button if you did. Don't forget this one, and consider to subscribe to us with the subscribe button below this video. I also want to invite you to our trading family, the Home Trader Club, where you can get your access to our comprehensive trading courses, media zone, real-time trading education, real-time trading opportunities, the community, tools, and way so much more. Join our family with the link below this video in the description. Meanwhile, thanks for your time. Good trading. Best to you and yours. I'll see you soon with more. Good trading. Adios.